Welcome to Stock Market Today, your market briefing delivering actionable insights on stocks, bonds, crypto, and the macro events that will move markets. Let's cut straight to what matters. Futures are up modestly this morning, ahead of key economic data drops later this week. Bond yields holding steady as traders digest inflation expectations. Crypto markets consolidating after yesterday's volatility. Sector rotation favoring financials and energy on rate expectations. Here's what's moving markets right now. Netflix trading at $76.06 per share. The streaming giant is pricing in an $82.7 billion acquisition of Warner Bros. Discovery assets with a shareholder vote scheduled for March 20th, 2026. One of the largest media consolidations in history reshaping stock valuation. Netflix's intrinsic value sits at $53.79 per share in base case, with bull case reaching $59.49. Current price reflects a 29 to 41% premium to fair value. Third-party models cluster between $55 and $80. The fundamentals remain solid. Revenue at $45.18 billion with gross profit of $21.91 billion. Free cash flow estimated at $9.46 billion. Operating margins at 31.5%. The advertising segment is particularly strong, doubling and projecting $3 billion in 2026. Here's the critical risk for traders. Netflix's current debt-to-equity ratio sits at 0.54 times. Post-acquisition, that explodes to 2.9 times. Annual interest expense jumps from $780 million to approximately $4.2 billion. That's nearly 50% of current free cash flow consumed by interest alone. Financial flexibility evaporates. The deal faces intense FTC and DOJ scrutiny on antitrust concerns. The breakup fee is $5.8 billion. Paramount and Skydance entered with a competing bid at $30 per share, with total implied valuation of $108.4 billion, significantly higher than Netflix's offer. Netflix shares dropped 43% from previous highs, primarily driven by acquisition concerns. Traders are pricing in integration complexity and regulatory approval uncertainty. If the deal succeeds, Netflix transforms into a vertically integrated studio powerhouse with access to premium content libraries, DC Comics properties, HBO assets, and Warner Bros. Film catalog. This provides a content moat. Combined cash flows could make debt manageable if synergies materialize. But this is binary. Failure means high debt service constrains growth, integration challenges destroy value, or regulatory rejection triggers breakup fees and sharp repricing. Using weighted average cost of capital parameters at 9.7%, the math suggests Netflix needs to deliver outsized synergies and flawless execution to justify current valuation. Any deal delays, regulatory pushback, or integration stumbles create downside risk back toward intrinsic value levels in the low to mid-50s. Upcoming catalysts to watch: regulatory decisions from the FTC and DOJ, shareholder vote outcomes, and developments in the Paramount Skydance competing bid. Each represents potential volatility triggers. Bottom line for traders today: Netflix at $76 prices in optimism. Intrinsic value calculations suggest fair value sits 20 to 30% lower. The Warner Bros. Acquisition either justifies this premium through successful transformation or repricing occurs. The upcoming weeks bring critical milestones that determine which outcome materializes. Trade accordingly with clear risk parameters. That's your market intel for Totem. Now get out there and trade smart. For more real-time insights, check out capitalcopilot.io.